When it comes to determining whether or not you should set up a property management entity, we're going to look at the assets themselves and where they're located. So what I'm going to do is I'm going to break this down for you in two different scenarios. The first scenario we're going to talk about is when you self-manage your own real estate. And then I'm going to go into the scenario where you have out-of-state properties and you're using a professional property manager to handle those properties for you to determine whether or not having a separate entity set up to deal with the PM makes sense. Okay, so let's talk about the one where you self-manage. So in a self-management scenario, you have your assets, your real estate assets held in separate LLCs. And of course, you know that I like to use this Wyoming LLC to be the owner or blocker entity, however you want to describe it, of my red boxes. And so then I'm down here like this. So if I was the owner of these properties or owner of this structure and I'm self-managing, then oftentimes I'm going to have the LLCs themselves collecting the rent from the tenant. So all the money would be paid to those red boxes. You would never pay any money down here from the tenants to your Wyoming LLC. That would be a mistake if you attempted to do that. So in this scenario right here, assume that this individual, let's say they live in Colorado and these properties are all Colorado LLCs, then what we're going to do is we're going to have a separate bank account set up for each of those Colorado LLCs, and the funds will be collected in that LLC name. Now, why would this person consider setting up a property management entity in this context? Well, one reason why you would set up a property management entity is if you wanted to simplify things. If you didn't want to have separate bank accounts for each of these LLCs and you wanted to have one entity dealing with all your tenants and collecting all the funds, then that would make sense to set up your own property management LLC. Now, when we're doing that, setting up this property management LLC, the question's going to come up is whether or not how it should be treated for federal tax purposes. And before I go into that issue right there, I want to give you some other reasons why you may want to consider using a property management entity when you're self-managing. So number one that I already mentioned was the fact that you're collecting all the funds at the property management level, so it simplifies the bank account issue. The second reason why you would want to consider this entity rather than doing it in your own name is that if you want anonymity, right? So you set up the structure with anonymity by using these red boxes all owned by the Wyoming Limited Liability Company. So if a tenant of this first LLC right here were to look up the LLC and wonder who owns it, it's going to point them down to the Wyoming LLC. And of course, that doesn't disclose your information. But the problem is that if you're out there every day or every week talking to your tenants, stopping by, how are things going, they're going to get the sense that you own the properties. So the anonymity benefit of the Wyoming LLC is substantially diminished vis-a-vis your tenants because you're out there dealing with them in your individual capacity. So if you want to continue with this idea that I don't want my tenants to associate me as the owner of the property, even though it's in an LLC, then using a property management LLC or some type of entity, I think makes a lot of sense there. Because now when you're dealing with your tenants, if you're doing it through the LLC, you're doing it as an officer of the LLC. So the tenants see the LLC itself as the property manager, and you are just an employee in their minds of that limited liability company. And it's not you as the individual owner that's holding themselves out with the authority to manage the property. So those are two compelling reasons why you may want to set this up. A third reason could be asset protection. So when you're dealing with tenants, there's so many different laws out there now when it comes to leasing property. And many times you may not even be aware of the law changes that take place. For example, discrimination, right? What constitutes discrimination? I was surprised to learn that if I put out an ad that stated that this house that I'm renting out is family friendly, well, I'm discriminating against people that do not have families, and that is actionable. All right, well, maybe 15 years ago it wouldn't have been, but now our laws are so crazy, you just can't keep up with the people that are actually put these laws into effect. So I want to make sure that I have a blocker there. So if somebody did come back against me and say, oh, you posted an ad that offended me, and so I'm going to sue you because I'm a miserable person and I feel even more miserable based upon reading your ad. And so that's actionable, right? So then they sue, they're going to sue the limited liability company, and we're going to try to insulate you personally from that lawsuit. So that's a third important reason why you may want to consider using this type of structure. So that's from a business standpoint. Now let's focus on the tax aspects of this structure as well. So when you set up the LLC, you have a choice. You can set it up as either a C-Corp for federal tax purposes. So it could be a C-Corp, it could be an S-Corp, or it could be disregarded, which means that it doesn't have to file a tax return. So this is really important here when you're structuring this entity, making sure you make the right tax election for this entity, because it could mean added expenses on an annual basis to maintain that property management structure that you've just put in place. So what are we thinking here? Now, if you set it up to be treated as a C-Corp or an S-Corp, you're going to have to file a tax return for those two structures. So with a C-Corp, it's going to be an 1120. With an S-Corp, it's going to be an 1120S. Now, a disregarded entity, there is no tax return that is required to be filed. So when I'm working with someone that has a rental portfolio, maybe it's a smaller portfolio and they're just starting out, we'll go through the aspects, the business aspects of why they should set up a property management entity. And then when it comes down to the tax election, what I will analyze then is how much income, net income, do we have coming off these properties? And how much could we then move into the corporation? What do I mean by move into the corporation, or the LLC, that is? See, what I'm looking for there is whether or not it makes financial sense to have this entity treated as a CRS to collect money at that entity and keep it as profit for the entity, because I'm going to take that profit and then pay it out to myself and write it off. Now, if I have my properties, let's say this property right here generates $2,000 a month in rental income, but when you add up my mortgage and all my other expenses, it turns out that I'm paying $1,750 out the door. Well, that only leaves $250 on a monthly basis where there could be income that I could use to pay a management fee. So in that scenario, there's not a lot of leftover income there. And so when you're thinking about, all right, do I want to set up a entity that's going to be a CRS that's going to have to file a tax return and start looking at some of the tax plays that could be done here? I may determine that $250, that's $2,400 a year. Maybe that's not enough for me. And so I won't do that. So if that's the case, if you realize that there's no benefit there for you from a tax standpoint because you have plenty of depreciation that wipes out that income anyways, then what I would do is I set up that property management entity. I would elect to treat it as a disregarded entity for tax purposes. And if you'd like to get a strategy session, as I mentioned earlier, hey, in the show notes below, there is a link that you can click on. It's a free 45-minute strategy session. You'll sit down with one of our representatives here at Anderson, and we'll analyze your structure, and we'll tell you whether or not, hey, does it make sense for me? Okay, why not get an opinion on that? Maybe a second opinion to see if you need a property management entity in your real estate investing structure. Guys, if you liked the video, be sure to hit the like button, and you know what it comes to subscribing. Punch that button and get subscribed. Take care.